Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm very excited and grateful to be here with you this morning as we are going to be taking another fresh perspective into the current financial landscape. But before we kickstart the session, let's run through our daily routine by confirming that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. So your highs will be some validation for me, ensuring that we are all on the same page, and then we can kickstart the session. And thank you very much as you do so. All right. So thank you for the comments. I can see a handful of comments right here. Thank you very, very much. Okay, so let's see what we have here. I can see Remy for sure. Thank you very much. Follow SF. Thank you. Tautis299. Thank you very much. Hey, Carrie. Good morning to you. Raja Hull 221. Good morning to you. And Queen Wild, good morning. Tautis, good morning to you. Anane, good morning to you. Ricey Rick, good morning to you. Glad to have you around. Anane, good morning as well. Okay, SJ3794596. Thank you very much. Good morning, guys. Good morning, guys. Thank you very much. So I love the positive energy in the air this morning, and it's on this note I welcome you all to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be dissecting the current market structure from a technical standpoint using fundamental tools such as trend lines, key levels, and of course, chart patterns to unravel the potential trajectory of price action during the New York session today. And in fact, I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. In fact, I have very exciting and simple setups we will be using to guide our decisions for today's trading session. Well, so far this week, we've been monitoring four major assets today. This week, sorry. And these are the US All Sports, the USTech100, the XAUUSD, and of course, the New Zealand USD, which was introduced to us at the beginning of the week by Rise Rick. And in fact, we've been doing fairly well across the board, and we shall be looking at how the market structure is today to see how we can capitalize on the next move, while we also see how to manage our existing positions. For those of you who are joining us for the first time, you're highly welcome on board. I'm very, very glad to have you around with us this morning. And I know you will be asking what this is all about. Well, as technical traders, we gather here every day to come together as a community and engage in follow-ups and reviews of our current positions in preparation of the New York session. The session kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in during the course of the session so you don't miss out on the insights that we will be sharing today. My aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. Once again, I extend a warm welcome to you, and I encourage you to actively engage in the comment section, as the more questions you can throw in, the better you get to understand how things works and improve on your own self too. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to check on the economic calendar. And of course, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, for today on the economic calendar, Wednesday, November 22, we have some handful of impactful events we will be looking forward to. And in fact, for those of you who don't know, we usually focus on high impactful events on the economies that affects the assets on our watch list. However, for today, Wednesday, we do not have any high impactful event. So what I did here was to include the medium impact events so that we can at least have an insight into the factors that will be affecting the market sentiments today. Now, when we do that correctly, okay, this is still loading up right now. So I'm not sure if you can still see me. I'm not sure if I'm still connected right here. Am I still connected? Okay, I think so. All right, hold on a second, please. I'm not sure if this is connecting. So I hope we can see my screen. Please let me know in the comment section if you can see my screen. I want to know if we are really connected right here, and so that we can know that we're on the same page. Please, if you can see my screen, please let me know. If you can hear me, please let me know in the comment section, and thank you very much as you do so. All right, so on the economic calendar for today, while I try to include the medium impactful events, so we have some handful of events to look out for today. Now, the first one here is the durable goods order, which is from the United States Economic Docket. And for those of you who don't know, this data is released by the U.S. Census Bureau, and it measures the cost of orders received by manufacturers for durable goods, which means goods planned to last for 3 years or more, such as motor vehicles and appliances. And one thing that everyone knows is how this data is sensitive to the U.S. economic situations, hence majority want to be looking forward to this data. And the final figure should show the state of the U.S. production activity. So generally speaking, a high reading is considered as positive for the United States Economic Docket. Oh, all right. So I can see. Thank you very much for that feedback. So I will be right back. Hello everyone. I'm so sorry for the break in transmission. I thought as much that there was some technical issues right here, so we had to sort out the issues. Please let me know if you can actually see my screen and hear my voice loud and clear so that we can all be on the same page. If you can see my screen and you can hear my voice loud and clear, let me know in the comment section. Steamroller, are you still around? Can you hear my voice? Gina 16, good morning. Can you hear my voice? Trader 675, Rosie X, can you hear my voice? Please let me know in the comment section, please. Thank you very much as you do so. Well, everything is fine from my own hand here. While I wait for your feedbacks, I will continue with the session. And before I do, I just noticed some unusual messages in the comment section, and I want everyone to be aware of this. Please avoid engaging with unsolicited messages offering referral links or additional gains on some external platforms. Extreme Speed is not responsible for such communications. Please stay vigilant and probably report any suspicious activity throughout the channel. So with that being said here, allow me continue with the session, and while I wait for your feedbacks to confirm that we're all on the same page here. So like I was saying before the break in transmission, we were talking about the economic calendar. We were trying to look into the fundamental factors that are likely going to be affecting the assets on our watch list for today. And based on this, we do not have any high impactful events. So I took it a step further to include the medium impactful event. And here we had a handful of impactful events to look out for today. And the first one I will be taking much significance to is the durable goods order from the United States economic docket, which will be coming up in about 3 hours from now. And for those of you who don't know what data this is, well, this is released by the US Census Bureau, and it measures the cost of orders received by manufacturers for durable goods, which means goods planned to last for 3 years or more, such as motor vehicles and appliances. Now, this figure, this data here is considered to be a sensitive one to the US economic situation, and this figure should show us the state of the United States production activity. Now, generally speaking, a high reading is considered to be a positive development for the US economy, which will dovetail to positive traction in favor of the US dollar. Now, if we look at the previous data for the month of September, we saw for both the excluding defense and excluding transportation, we have 4.6, 5.7, and 0.4% respectively. And if we compare it with the consensus projection for the month of October, we will see that the data is quite below the previous one, which gives us an insight into the expectation that there is likely going to be a contraction in that regard. So we want to be looking forward to see what the actual data will be on that one. Then moving on, simultaneously, we are going to be witnessing the publication of the initial jobless claims for the month of November. Well, this data is released by the US Department of Labor, and it measures the number of people filing first-time claims for statement unemployment insurance. Now, a larger than expected number indicates weakness in the US labor market, which reflects negatively on the US economy and is considered negative for the US dollar as well. So we want to look forward to what the actual data will be. Now, if we look at what happened in the month of October, we have 231,000 and we have a consensus projection of 225,000 for the month of November. So we also look forward to see what the actual data is going to be on that one. All right, I'm just seeing all your comments. Tim Roller, Remy for sure, Bazi Brit, Coco Bella, Rise Rick, and Opebalo. Thank you very much for those feedbacks, and I'm glad that we are all on the same page together here. Thank you very much. And so the last one here I'm be looking forward to is the publication from the University of Michigan later today. That's about 5 hours from now. That is the Consumer Sentiment Index. Now, this is a survey gauging sentiment among consumers in the United States. Now, this data shows a picture of whether or not consumers are willing to spend money, a key factor as consumer spending is a major driver of any economy, let alone the US economy here. Now, a figure, a high reading is considered as positive for the US economy, which should be reflect as a positive traction for the US dollar as well. Now, if we look at the previous data for the month of October, it came in at 60.4, and we have a consensus projecting 60.5. So there's an expectation of a little bit of expansion in that regard. So we look forward to see what the actual data will be on that one too. But one thing for sure is that the anticipation of this event alone usually affect the market sentiment, and of course we will be seeing it reflect on the chart as price action. Now, talking about price action, let's dive right into the chart and let's see what is going on in the market right now. So the first asset we will be looking at today is going to be the US All Spot. And on the US All Spot, since the beginning of this week, remember that we have been buying these assets. Now let's look at what is going on the 1 hour time frame and what led to the decisions we made at the beginning of the week. Now, before we go into this detail, I would like to take us through the fundamental factors that are driving the market sentiment at the moment, as we have some interesting latest development which happened in the last 24 hours. Now, one of the data that came in yesterday was the API weekly crude oil stock, which surged by a significant 9.047 million barrels in the last week, which is phenomenally high compared to the previous figure of 1.335 million barrel. Now, the increase in US crude oil stock offsets the gains caused by the projected supply restrictions from the OPEC plus members and allied producers. Now, the buy positions we had yesterday has been taken out with some small profit as it is. I hope you moved your stop losses accordingly, and if you had done that, you must have been taken out with some reasonable amount of profit, or the worst case scenario, break even. Now, the US oil prices are facing moderate downward pressure right now due to the substantial buildup of US crude oil stockpiles, leading to a 3-day winning streak being snapped and trading lower the 77.00 area today. Now, if we take all this into consideration, how do we intend to capitalize on the next move? With the way things are going, we know that if there is an high increase in supply, then chances are that price is likely going to be dropping to the downside. But if we also take into consideration the anticipation of the OPEC Plus meeting coming up on Sunday, that's November 26th, there's a lot of speculation out there that there is likely going to be much more oil cuts on that day. So these are very, very sensitive events that we want to be taken into consideration too, while we dissect the current market structure from a technical standpoint. Now, let's go to the beginning of the week. What really happened? What did we see? So that those who are those who missed out on the earlier sessions will be on the same page with us. So at the beginning of the week, we observed here that price action was initially confined within this range around the $76.80 level and the $75.90 area, as you will see here, has been gave us an insight into the level of indecision in the market at that point. And I did mention on Monday how this area has been a significant, a crucial zone, considering the fact that it is trading just exactly around the descending trend line of that, the resistant line of that descending channel on the higher time frame. Don't worry, we will be talking about that in a moment. Now, with the situation we had here, we agreed that if price will break out of the resistant line here, we will be capitalizing on that bullish opportunity. As you will see here, price broke out of the structure exactly during our live session on Monday, and we capitalized on that move all the way into the $78.40 area, giving us over 160 pips to catch there. Now, with the situation we have here, since that Monday, you will see that selling pressure are taking over this market. And despite the selling pressure we have seen here, it is quite clear that price action had been confined within the $77.95 level and the $77 area to further emphasize the level of indecision here. Though we had some buy position triggered here yesterday, especially after the breakout of the $77.50 level, where we saw price move about, how many pips was that? Moved about 45 pips before the sell pressure came in to take us out of that position. And I do hope you guys moved your stop losses accordingly. You know how we do it in this community. When price moves in our favor, we ensure that we secure our positions so that we can protect our positions against any sudden pullback. Now, at this point in time, we do not have any positions running right now. And how do we intend to capitalize on the move? Is the market going to be reacting negatively to the US oil stockpile that we witnessed yesterday? Or are we going to be having a bullish sentiment, a positive sentiment in anticipation of the OPEC Plus meeting coming up on the 26th of November, on Sunday this week? So let's see how this is going to play out. So the first thing we are going to be doing right now is to scale up into the higher time frame so that we can have an holistic perspective into what is going on, and that will help us to position ourselves for the next move. Now, scaling up into the 4 hours time frame, we had a simple setup here which was projected after considering the nature of price action in the last 3 to 4 weeks. And what we saw in this market was how price had consistently and uniformly found lower lows and lower highs to form a beautiful descending channel to work with. Now, when we connected the series of lower highs, we had this beautiful resistant line of that descending channel. And then when we connected the series of lower lows, we have the support line of this descending channel, giving us something to work with. Now, something interesting happened at the beginning of this week as we saw how price finally broke out of the descending the resistant line of that descending channel right here, just exactly around our key level for this week at the $76 area. Now, from a technical standpoint, whenever we notice the breakout of this structure, we do expect that price at some point will come back to retest the structure in anticipation of another wave of bullish momentum. Now, price has broken out of that structure, and since the breakout happened, we saw what happened here, that as soon as price tested the $78.40 level, price action has fallen into a range which is looking more like a reversal pattern, maybe a double top structure, probably to incite price coming back to retest the resistance line to incite an uptrend, or even break it down back into the seller's territory within the descending channel. Now, how do we intend to capitalize on the next move? Now, if I zoom into this current structure here, you will begin to notice that we have a reversal setup, something like a double top structure right here. Now, as the inability of buyers to break out of the previous high for us is a flat red flag that price may further drop to the downside. And you know how we do it in this community, especially when we identify the potential transition of price action into a reversal pattern in the form of a double top structure. We want to be marking out the neckline of that pattern, which we need it to be broken to validate the potency of this reversal pattern. So we have this $77.10 area, which of course you do want to be marking out on your chart, as we will be needing it to help us validate if price will be going to the downside. So we have the $77.10 level marked out here. Now, if price will break down the resistance line, the support line here, which happens to be the neckline, then we want to be looking at some selling opportunity, maybe back into the $76 area, which will be giving us a minimum of 100 pips, or back into the trend line here, which will be giving us a maximum of 200 pips to catch here. Now, how do we intend to capitalize on this one? So we shall be scaling down into the 1 hour time frame to look out for trading opportunities around the $77.10 level. Now, in that regard, let's move into the 1 hour time frame, and here we are. So I'll zoom right into the current structure, and as you will see, we are at a crucial juncture where price is currently oscillating just exactly around the $77.10 area. Now, if price action will break down and retest the structure, we are likely going to be seeing a bearish move to the downside. Now, another thing about this whole area is we might likely be seeing some selling opportunities even before the breakdown of the $77.10 level happens. Now, the question is, how is that? Now, look at the $77.50 area, which was broken about an hour ago, as you will see, with an engulfing bearish candle. We might likely see some buy pressure resume back into the structure, and if buyers find it difficult to break out of the $77.50 level, and we continue to see some selling pressure or a sharp rejection of that area, we want to join a sell momentum. Then we have a sell stop order below the $77.10 area to join the decline to the downside. And if price continues to drop, we have levels such as the $77.60 area, and also our key level at the $76 area to guide our trading decisions going forward. If price continues to drop further, we had more sell position, and in fact, if buy pressure resumes around this area, then we want to be joining an uptrend move. So you can see how crucial where price action is, and depending on what happens around this area is likely going to be determining what our next line of action will be. So I'm looking at a potential selling opportunities here. Now, the first scenario is a retracement back into this area before the breakdown happen. That's one way we can look at this. Or the second one is a breakdown retest of the $77.10 area. Now, in as much as it's looking as if price is gradually gaining momentum to the downside, there are still chances that buyers could still maintain the momentum it started this week with. Now, I want to say here that if we are joining a bearish move, let's ensure that we move our stop losses accordingly as price moves in our favor, because buyers could still take over the market anytime soon. Now, with the way things are going here, what are the situations we will be looking at to buy if price does not drop to the downside? Well, I want to be positioning myself anywhere above the $77.95 area, as a breakout of the $77.95 area would have taken out all the sell positions here, as you will see that in the last 48 hours, this level had played a major role in negating all attempt by the buyers to break out of that structure. Now, that will be the only condition for me to buy the US All Spot today. And if price continues to climb up, breaking out of the $78.40 level, we will be adding more positions to the existing trade. So for today's trading session, we maintain a bearish bias and only look out for buying opportunities if price will break out of the $77.95 level. So that is how we are going to be managing our position on this asset today. If you have any questions, feel free to let me know in the comment section below. So I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever, while you also use that time to mark out these levels on your chart. All right. So I can see a couple of comments here. First of all, I see Zexono Bidahui. Okay, I hope I pronounced that correctly. Kid Pin says this is his first time here. I'm very glad to have you around with us this morning. All right. I also see hello Steamroller. Steamroller says I'm on a sell at 77.8. Oh, great. So that means you entered earlier. So let's see how this is going to play out. Just ensure your stop losses is sitting anywhere above the $77.95 or around that area. Let's see how the market will play out, because buyers still have a potential around this area because of the fact that sellers have been finding it difficult to break through this area. Now, if this area gets broken today, then we might likely be seeing a massive sell-off to the downside. So very good one there. Let's see how the market play out around this point. All right. So okay, so let's move on to the next asset in the absence of no questions, and that will be great. So the next asset on our watch list for today's trading session is the USTech100, and we've been having some quite interesting situations going on in this market since the beginning of the week. Remember, we were buying at some point. That was the first day of the week before some selling potential came in yesterday, taking us out of the buy position, and how we talked about looking out for selling opportunities if price breaks down the 16,015 level, and of course the ascending trend line here. So let's take a quick look into how the market started for us this week. Now, at the beginning of the week, we saw this range here where price was initially confined between the 15,845 level and the 15,790 area to give us an insight into the level of uncertainty going on in this particular market. And you know how we do it whenever price action falls into this kind of range. We want to exercise patience and wait for either the breakout or breakdown of that range to give us an opportunity to trade. Now, I can remember that during our live session on Monday, I told us all that I already have a breakout of structure, buy position triggered at the breakout of that level, and I did mention that for those of us who missed out on this one should exercise patience and see if the market will come back to retest the structure in anticipation of the uptrend continuation, which was exactly what happened as we saw price continue to the upside. And in fact, we were able to scoop in about three more positions as we rode the momentum all the way to the upside, adding more positions at the breakout of levels such as the 15,800, 15,970, and of course, I think, okay, we only have three positions on the USTech100, and on those three positions, we saw how price moved over 200 pips on the first one. Then the second one, we saw about 180 pips. And then the third one, we had about 100 pips, giving us roughly 400 pips for the first trading day of the week, which was not bad at all. Then during our live session yesterday, we talked about this consolidation phase right here, where we saw price confined within the 16,065 level and the $16,015 area, where we said a breakout in any particular direction will be giving us clues into where price is likely going for yesterday's trading session. And we saw what happened here. Price did break down the 16,015, and for those of us who capitalize on that opportunity, well done and kudos to you for being on standby to capitalize on that move, as we saw price move over 150 pips in our favor. And I do hope that you moved your stop losses accordingly, and if you had done that, you must have been taken out with a minimum of 80 to 100 pips on that sell positions as well. Kudos to you everyone for being on standby to capitalize on that one. And if you remember what I said here yesterday, that if price drops and then goes into that zone between the 15,800 and the 15,850, we are likely going to be seeing some buying opportunities. That if we see reversal patterns there, we want to get ready for an uptrend move, and if price goes on to break down structure, we will be looking for ways to add more sell positions to our existing trend. And as you will see, buy pressure did resume around this area, taking us out of all sell positions. So we will be looking at how we are going to be capitalizing on the next move. And for the sake of those who are not part of our earlier sessions, let's quickly run through the higher time frame so we can all be on the same page by taking a quick look from at the higher time frame from an holistic perspective as well. Now, on the 4 hours time frame was basically where our center of focus began for this week. And of course, we noticed that price action has been on a strong bullish momentum since the beginning of this month. And we have a couple of ascending trend lines here, which of course emphasize the strength of the buyers in this particular market. And you know how we use our ascending trend line. As long as price remains above the ascending trend line, we shall feel comfortable in our buy position and look out for more opportunities to buy. Now, in addition to this ascending trend line, we were able to spot some very important levels. Most especially is the key level situated at the 15,850 area, which we said we will be using as a yardstick to guide our trading decisions for this week. And you know how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that support the idea of buying that asset. And because of this key level was broken at the beginning of the week, that was why we bought the USTech100. Now, coupled with that was the fact that price was within a range, and we said we want to be capitalizing on that uptrend even before the breakout of the resistance line happened. Now, if you look at what has been going on since the beginning of the week, we can see how price broke out of the key level at the 15,850, came back to retest the structure, though it didn't come close to that area. But the fact that we saw buy pressure resume above that level shows us that sellers are even finding it difficult to bring price close to the key level. Now, the continued buy pressure for me at this area is a beautiful sign that price is likely going to continue to the upside. And in fact, if price will take out the resistant line of this range for the second time, at this point in time, I want to feel very confident of adding more buy positions to my existing trade. Now, with the information we have gathered here on the 4 hours time frame, then another thing I would like to state here is the highest point where price action has been for this week, which is exactly at the 16,065 level. With price continues further to break out of that structure, we will be adding more position. Now let's scale back down into the 1 hour time frame. I just wanted us to see what things are looking like from an holistic perspective, so when we discuss on a lower time frame, you will be able to understand what we were trying to say and see things from the same perspective. Now, what I did this morning while trying to dissect the current market structure was to try to understand the psychology behind this area. As you will see that since the New York session yesterday, we saw our price was confined within the 15,800 and the 15,940. There's a typographical error here, so let me just include that in 15,940, as you will see here. Now, one thing we did here was what I did here this morning was to consider this whole consolidation phase as a reversal pattern. And why have I said that? Well, if you look at the nature of these candles that tested the 15,800, you will see that we had sharp rejection, revealing that sellers were finding it difficult to settle below that level. And in that regard, during the early hours of today, we saw some higher lows here, which reveals that buyers are gradually gaining some momentum. So for me, I saw this as a reversal pattern, and you know how we do it when we identify reversal patterns on our chart. The next thing we want to be doing is to mark out the neckline, which interestingly lines up with the 15,940 level. Now, we need price to break out of that neckline to validate the potency of that reversal pattern, which appears to be happening right now. As you will see that in the last 30 minutes, we have seen this increased bullish momentum around the 15,940, breaking out of that candle. Now, for those of you who capitalize on this breakout, well done to you. Kudos to you for being on standby to capitalize on that move, and please ensure you have your stop losses somewhere right below the previous low, which will be dovetailing to between 40 to 50 pips depending on where your entry was at. Then another thing I would like to call our attention to is the descending trend line here. That's from the retracement of that impulsive move that we witnessed at the beginning of the week. It appears that this trend line has also been broken. So if you had missed out on the breakout of the 15,940, well, I will advise for you to exercise patience, and let's see if the market would either come back to retest the 15,940 or this descending trend line in anticipation of another wave of bullish momentum. So this simply means that your stop losses should be right below the descending trend line so that it can capture all the potential movements in price action back into this area before the potential uptrend situation happens here. So on the USTech100 for today, I remain bullish, and we'll continue to look out for more opportunities at the breakout of levels such as the 15,970, the $16,015 area, and of course the 16,065 level around this area. So things are looking very bullish today on the USTech100. We remain bullish as long as price remains above the 15,940 on the USTech100. Now, in as much as we're looking out for buying opportunity on the USTech100, we cannot ignore the potentials that sellers could to push price to the downside. Now, with that in mind, if I am going to be selling the USTech 100, what is it that we want to see on this chart that will make us feel comfortable and confident to negate the bullish idea we just identified here? Well, personally, if I were you, I will be looking out for price taking out all the buy positions within the 15,800 and the 15,850 for me to start considering selling. And remember that we will not be getting too excited, as we will need some further confirmations to give us a confidence of joining a sell move. So the only condition that will make me sell here is for price to drop below the zone, retest of structure, then we can join that decline to the downside. So that is the only scenario here that will make us consider selling the USTech 100. And besides this, I'm of the opinion that price will continue to the upside today. So let's remain bullish here and only change to bearish if price breaks down the range between the 15,800 and the 15,850. Oh, sorry, what's this? 15,880. This 15,880. Sorry about that. This 15,880 and 15,850. So let's see how the market will react to the structure. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next asset on our watch list. All right, so in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we move on to the next asset on our watch list. So the next asset on our watch list is the New Zealand USD. This is an asset introduced to us by Rick. That was on Monday. And Rick, are you still around with us? Let's run through this together and see what is really going on in this market so far. Well, at this point in time, we have been taken out of all the buy positions we had since the beginning of the week. Remember, we bought at the retest of that key level at the 0.600 area, as you will see here. Now, during our live session on Monday, we had some couple of parameters here that we said we will be using to guide our decisions for the week. One of them is the ascending trend line, which we spotted here after capturing this series of higher lows since last week Friday, as you will see here. And we agreed that as long as price action remains above this ascending trend line, we shall feel comfortable buying this asset and of course look out for more buying opportunities in this market, and that the only condition that will make us negate the bullish attempt is for price to break down the ascending trend line. Now, in addition to that was this range we identified at the beginning of the week, as we saw price confined within the 0.6041 and the 0.59800. Though the week started with a bullish momentum, as we saw here, and then price came back after breaking out of our key level at the 0.600 area. Remember, that was our neckline on the higher time frame. For the sake of clarity, let me run through the daily time frame so you can see the neckline we are talking about here. So that is the 0.6100 level. This is the daily time frame, and in fact it was the neckline of that reversal pattern we spotted after noticing that sellers were unable to break down of that range between the 0.58600 level and the 0.57700 area. As you will see, every attempt by the sellers to break through was met with strong resistance from the buyers. And what we were actually looking out for was the breakout retest of the neckline for us to join an uptrend move. And right now we already have a breakout of the neckline. Price appears to be coming close to the retest of the neckline, maybe to incite an uptrend move. Now let's go back into the 1 hour time frame and let's see what is really going on here. Now we saw price continue to the upside here. I think it moved about 70 to 80 pips in our favor before this bearish momentum happened. We also added one more position here that also moved about 40 pips before the bearish momentum happened, and I do hope you moved your stop losses accordingly. If you had done so, you must have been taken out with a reasonable amount of profit on that one. Now, with the way things are going right now, we have a sell position. For those who took advantage of this counter trend opportunity, I will be encouraging you to move your stop losses right now, as the momentum is still looking very, very bullish. Remember, this is the neckline we identified on the higher time frame, which happens to be our key level for this week. And as long as price remains above that structure, we shall still feel comfortable in the buy position. So right now, I still remain very, very bullish on this particular asset, and we shall be looking out for more opportunities if price will break out and retest the 0.604100 area, and if it continues to climb new highs, break out of the 0.60750 and the 0.61050 area, will be welcoming more buy positions on this particular one. So let's keep this in mind. And if we are going to be buying at the breakout retest of the 0.60410, let's ensure that our stop loss will be right below the previous low. It could be as far as the neckline area, which we have about 30 to 40 pips as stop loss on this particular one. So choose your stop losses accordingly, depending on your own current situation of your portfolio. So we remain bullish on the New Zealand USD. Now, the only condition that will make me want to consider selling the New Zealand USD from a long-term perspective is for price action to break down this key level at the 0.600 area. Now, if price will break down the structure, retest it then I want to be looking out for selling opportunities, and a further breakdown of the 0.5980 will welcome additional sell positions here. But I doubt if this is going to happen today based on the current market structure, as I remain very bullish on this particular one. So let's see how this is going to play out in the next couple of hours, and we shall be back here tomorrow to review how well these assets have been doing. So we remain bullish here, looking out for more opportunities above the 0.60410 area. So these are my views on the New Zealand USD. If you have any questions whatsoever as regards to the current setup, feel free to let me know in the comment section below. So because of the time we have left, I will be taking the next 5 seconds to see if there are any questions whatsoever before we move on to the last financial asset on our watch list for today. All right, so in the absence of no questions, I want to take this as a confirmation that we are good to go. So in that regard, we move on to the last and final asset on our watch list for today. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And in fact, we've been doing very, very well on this particular asset since the beginning of the week. Now, for the sake of clarity, let's run through how the week started for us here and what led to the decisions we made. At the beginning of the week, we had our key level situated at the 1,980, and we saw how price action was oscillating right around our key level, which further emphasized the importance of that juncture and at the same time emphasized the level of indecision around that area, as we saw price confined within the 1,985 and the 1,973.50 level. Then in addition to that range was the ascending trend line we spotted that captured the series of higher lows since last week Wednesday, as we will see here. And as long as price remains above our ascending trend line, we want to feel comfortable in our buy position. However, at the beginning of the week, we saw how price broke down our ascending trend line, giving us signs that sellers are coming in, and we said that if price goes on to break down the support line of that range at the $1,973.50 level, we shall be selling the XAUUSD. And in fact, we saw price break down that structure, moved about 70 to 80 pips in our favor before the bullish momentum came in, and of course we moved our stop losses accordingly as we were taking out with a worst case scenario break even on that one. Then remember that we have the descending trend line. We also said that if price action breaks out of the descending trend line and break out of our key level, we look out for buying opportunities here. Then we saw price climb up, break out of the 1,980, and since that moment we have been in a buy position. We rode the momentum all the way up, and during the live session yesterday, I also mentioned that the fact that price action still remains above our ascending trend line will make us look out for more buying opportunities at the breakout of the 1,989 level. Then we also added multiple entries like the 1,993 and the $2,000 area to maximize the potential of this bullish move. So it was a very profitable 48 hours for us in this community as we rode this momentum all the way to the upside. And for those of us who still have a buy position running at this point in time, I will be suggesting that you move your stop loss to anywhere around the 1,999 level and the 1,995 area, as we do want to be giving enough breathing space for price action to move around. Now, with a well-secured position at this juncture, how do we intend to capitalize on the next move? Well, if we look at the fundamental factors that is driving the current market situation, remember yesterday we were looking forward to the FOMC meeting minute, which came in with an hawkish perspective, as we were able to see in detail what really happened 3 weeks ago, as we saw that the Federal Reserve officials were considering and contemplating on another rate hike before the end of the year if the inflation rates still remains very sticky, which opens the avenue of another interest rate hike before the end of the year. And as a result of this, we have seen how the US Treasury bond yield also did some short covering in the last 6 to 10 hours, hereby boosting the US dollar as well. Now, how is this latest development going to be affecting the XAUUSD? Well, we're beginning to see some consolidation phase in this market, especially since the Asian session today. As you will see, it is clearly written all over the place that price action has been confined within the 1996 level and the 2005 area since yesterday's trading session, to further emphasize the indecision going on in this market. As a result of this price action, in the last 12 to 15 hours, I'm of the opinion that this move may be, from a technical standpoint, could be a retracement of that impulsive move. But because of this hawkish outlook from the FOMC meeting minute, I'm of the opinion that we cannot ignore the potentials that sellers could still come back into this market to push price to the downside. So as a result of this, we want to be very, very careful. Now, for those who still have a buy position, kindly move your stop losses and secure the current positions while we try to navigate how we are going to be positioning ourselves for the next move. Now, the first thing I would like to acknowledge here is the ascending trend line, which has been holding this bullish momentum since last week Wednesday, as you will see here. And as long as price remains above this ascending trend line, we shall feel comfortable buying the XAUUSD. So as a result of this, I maintain a bullish bias on this particular asset. And the only condition that will make me want to sell is for price to break down this ascending trend line today. If price will break down the ascending trend line, then I want to start considering selling. Though we have been seeing some signs that sellers may likely take over the day, as we saw some selling pressure around the $2007.50 level. Then we saw a lower high around this area, which gives us signs that sellers are building up momentum here. But I don't think that is enough for us to jump into a bearish perspective at this point in time. So that is why we have our ascending trend line in place. If price can break down, retest the ascending trend line, then I want to start considering selling. But if price still remains above, I'm looking at buying more. Had to break out at above the $2,000 mark, which I already did this morning. I had another position around this area, and if price continues to climb up, breaking out of the $2007.50 level, I will be adding more buy positions to my existing trade. So let's see how the market will play out around this area. I maintain a bullish bias here, and the only condition that will make us considering selling the XAUUSD today is for price to drop below the ascending trend line. So these are my views on the XAUUSD today. I do hope I made myself very clear, and if you have any questions, I will be taking the next 5 seconds to see if there are any before we start rounding off for today's trading session. So I see your comment, Steamroller. Glad you're still around. And you are asking here that what is it after $2007.50 level? Well, okay, we can look at the higher time frame to look at that. But personally, I usually wait for new setups to emerge itself, like a retest, retracement a little bit before I join the uptrend move. But we can look at the higher time frame to see if we can find something to work with around that area. So let's see here. Okay, I think we have 2010 area. So we have the highest peak here at the 2010 level, where we can actually look out for more opportunities, which interestingly also is a strong psychological area considering the round figure of that price. So we can mark out the $2010 mark, and let's see if price will get to that level at all. But however, I still think that we could still have some more buy positions before we get to that level. So we have to be very dynamic and fluid as possible to be able to capitalize on that one. But in the meantime, $2010 area seems reasonable to add more position from a long-term perspective. So I hope I made myself clear there. Steamroller. And I can see Remy for sure. Remy for sure says, how would Hamas and Israel war affect the gold? Well, that is quite a simple question to answer there. Of course, we know when there is geopolitical tensions, investors usually push their capitals from currency assets or whatever assets into safe haven assets such as gold, silvers, and the like. So this is, and since the gold is one of the most popular safe haven assets, due to this geopolitical tension, because it could easily affect any economy. Okay, for instance, if you listen to what Andrew Bailey said yesterday, he said something about the situation in Gaza Strip is likely going to be affecting or allowing the inflation rate to increase in the United Kingdom. So now look at how Gaza is affecting the inflation rate in the United Kingdom economy. Now, if that happens, majority will want to move their funds into safe haven assets, which is not subject to any economy whatsoever. So that is why people will move their money into safe haven assets. I hope I answered your question, Remy, for sure. Innocent Babe, all right, glad to have you around here. Innocent Babe as well, you're welcome, Steamroller. And it has been a wonderful moment with you guys so far today, as we were able to attend to 4 major assets today. We had the USOILSPOT, the USTech100, the New Zealand USD, which was introduced to us by Rick. Then we also finally ended the day with the XAUUSD, and in fact we've been doing fairly well across board. Let's see how the market is going to play out in the next couple of hours. So we've been able to identify simple setups using fundamental tools such as trend lines, key levels, and chart patterns to position ourselves ahead of the next move. So we will be back here again tomorrow to see how well they are doing, and in fact get ready for tomorrow's trading session as well. For those of you who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And in fact, I look forward to seeing more of you, as the more time you spend with us in this community, the better you will become in understanding the analytical approach we have adopted here, and eventually be able to make your own independent trading decisions using the information you have gathered here. So I look forward to seeing you all guys same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing so far. Okay, I can see Innocent Babe says that, what do you think will be the resistance for USTech100? Okay, let's go through that again and see what is going on there. So let's just quickly take a look at this. Okay, so we have multiple resistance levels here. We had the 15,970 has been broken. I hope you're taking advantage of it at the breakout of 15,940. We have the 16,015, another resistance level there. We also have another 16,065 level, which happens to be the highest point price action has been in recent times. So let's see how far this is going to go after that level. And then if we have retest of retracements along the line, then we can aim at new highs as another entry point. So I hope I answered your question there. And in that regard, I'll just call it a day here. And always remember to have a consistent and well-defined risk management strategy, as we all know that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So on this note, I wish you best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.